All right, so you said I should start with the Harami candlestick pattern. The Harami candlestick pattern. Okay, that is what we are about to start now. Okay, let's do a recap of that. Then let me share my screen. Now, I said the Harami candlestick pattern. Okay, this is a Harami candlestick pattern. When we say Harami, we mean pregnancy. See Harami like a pregnant woman. A pregnant woman. Now, the baby is in front. The mother is at the back. The baby is in front of the mother. Pregnancy, the baby is in front of the mother. And the color of the baby, the candlestick that represents the baby is the direction that the market wants to give you. Is the direction that the market wants to give you. Remember, we said what we are teaching you is reversal candlestick pattern. Reversal candlestick pattern, because what we do in this chart, this market is we look out for opportunity to be on the trend. If you are on the trend, then you continue to enjoy the movement, the ride. But if you are not on the trend, you are waiting for what? A little pullback and continuation, or a change of the trend so that you join the trend. Currently, there are some markets we are looking for a reversal, like all JPY pairs. We are looking for a reversal. All JPY pairs, anything that has to do with JPY, they are buying because JPY is a quote currency. So everything that has to do with JPY now, they are all in the heavens. They are all flying. They are buying. Why? Because JPY as a currency is weak, and it has been weak for throughout last week. JPY pair was weak, and even this week, as I speak today, now JPY pair is still weak. But we're expecting a reversal of that weakness. A reversal of that weakness. And whenever it happens, some persons that are on the trend now that are selling JPY, buying any of the JPY crosses, they are in that trend. Now, some persons that are not on that trend, they'll be waiting patiently for what? A reversal. And that reversal should appear on the very important levels, those levels. When we talked about your basic, we talked about support and resistance or area of value. For me, I usually talk about the native levels of price. So whenever the price gets to that point, we are looking at it getting to a support so that we initiate our buy. That is what everybody is looking for. So that we initiate our buy. So we have the Harami candlestick pattern. When you will see this candlestick pattern that we are teaching you is at those places where you call area of value. You don't look at it anywhere on the chart. You don't look at it anywhere on the chart. It can appear anywhere. But that thing that it has appeared anywhere makes you to leave the market early enough. And if you're lily livered or you don't have a knowledge of what you're doing, you want to run away. But when you see it at those levels, those areas of value, then you need to do what? It now gives you a signal for a buy or a sell. So that is what we're saying. Now, this is the bullish Harami. Bullish Harami means we are looking for opportunity to buy. Bullish Harami occurs at the support. That is where bullish Harami occurs, at the support. And if it happens at the support, you are looking for opportunity to buy. That means the market will be selling when you have seen something like this, a Harami, something like this. It tells you it's an opportunity for you to engage the market for a buy. It's an opportunity for you to engage the market for a buy. If it is happening at an area of value, I'm stressing this thing because so that you don't go out and say, I saw Harami. Where did you see it is the question. You can see it anywhere on the chart, but the question is, where did you see it? Because if you see it as an area of value, then it will give you what you want. But if you see it, if you don't see it in that area of value, brother, don't bother your head. That market will not give you what your desire. It will not give you your desire. You'll just be chasing wind. It's two things. It's either you enter a wrong trade, it will give you a fake signal, or you exit that trade early enough. That is why we keep telling people knowledge is key. Knowledge is key because you must first, the foundation is that you must know where is your support, where is your resistance, where is your support, where is your resistance. Because or what we call the 4 native levels of price. If you understand that, price comes to those native levels, especially 2 of those native levels, then you can initiate your buy or a sell. Okay, or why many people call it support and resistance? It's actually not support and resistance. Because if I tell you now to draw your support will be quite different from my own support. It will be quite different from Mr. Dan's support. It will be different from Mr. Moses' support. It will be different from so many persons. But if we draw our native levels, my native levels must be the same with your own native level, unless you don't know what is the native level. And that is why we say it's very important we understand that. Very important we understand that. So this is what we call the Harami. Bullish Harami candlestick pattern, bullish Harami. When you see this in at the support, it tells you you should do what? Pull your trigger for a buy. Remember, when you see those things happen, you know that hello, can you hear me? Please confirm if you can hear me.
Yes, sir, we can hear you.
Okay. So when you see those things happen, you now pull your trigger. We are not saying when you see this candlestick appear, that immediately you should enter a buy. No, that is not what I am telling you today. What I am telling you today is that when you have seen this signal, it means that you should get ready. Get ready does not mean to run. The glass cup. Get ready does not mean you should run. Get ready is that you should get set. Set is that anytime you're going to run. That is the meaning. So when you see this thing happen, it now gives you a signal that yes, this market is going for a buy. This market is going for a buy. When we did the single candlestick pattern, I showed you when you see something like a hammer at the support, it gives you a confirmation because that wick you will see at the support tells you buyer strength. It tells you the buyer strength. When you see that thing at that area of value, then you should do what? Initiate your buy or sell. Now, for example, I have this place as my support. Now I have this candlestick appeared here. What is it telling me? It's telling me that, look, we want to buy. 2 things you can do if you are a conservative trader. Conservative trader will wait for the next candlestick to come out if it did not take out the low of this candlestick. Because price, remember when we did types of market, we say we'll have uptrending and downtrending market. And what are the characteristics of a downtrending market? We said that the market will be doing lower low than the previous low and lower high than the previous high. That is the characteristics of the market. When you see bearish candlestick, that candlestick will be doing lower low, lower low, lower low at any point in time. If it fails to do a lower low, glass. When the market fails to do lower low, as a trader, it should place you on inquiry. The question is, why is it that this market did not take out this low? Why is it that this market did not take out this low, creating lower low? Brother, if you have seen that thing, it means you need to get set that the market wants to reverse. The market wants to, even if it is one candlestick, you will see it. Look at this candlestick now. This one, look at it. If you can see my mouse, this is a bearish candlestick. This is a bearish candlestick.
Sir, we can't see your screen. You didn't share your screen, sir.
Are you serious?
Yes, sir.
Yeah.
You've been seeing your handsome face.
Okay, sorry about that. Okay, can't see your chart. Okay, I will discuss all of this. All right, let me share my screen. I thought I'm sharing my screen. Okay. Okay, so now I said, okay, can you see my screen? Now confirm if you can see my screen, please.
Yes, yes.
Yes, sir, we can.
Great. 1 minute, please. Sorry, please let me. Don't do yourself. Hey, give me this. Give me. Let me have. Sorry, I just what just called on my system now. I need to. Please give me something. Let me clean it. 1 minute, please. Lagos. Ezine. Ezine. Hello, Ezine, can you hear me?
Yes, I can hear you now.
Ezine, please handle the class. Just give me some minutes. I need to attend to something now, please. Do you understand me? I will log in back. I need to check something on my system.
No problem. You just are
what I just poured on my system, on my what's it called? My keyboard.
Okay.
Oh, sorry about that.
No problem. I'll come back.
Sorry about that, sir.
No problem.
What topic are you in?
Candlestick.
Each type of candlestick.
Start with we're just doing a revision on Harami.
Haramic, please. And Tweezer.
Okay.
Yeah, Harami and Tweezer. But I will join before you finish Harami. Let me check what's the problem. What's the problem?
I'm sorry. Okay, just hold on. Let me log in with my system. I initially logged in with my phone. Log in with my system.
All right.
Listen, let me make you the host before I go off the meeting.
No problem. Okay. We're starting now, please. Let's just... Okay, good evening. Once again, nice to have you guys again. All right, let me continue from where he stopped. He was discussing about tweezers, Harami. Harami, then let me share the screen. Harami, that's second, the two family candlestick. Am I right? Two pattern family candlestick, which are the engulfing, tweezers, Harami, and piercing line. That's medium reliability. Where are they? Medium reliability. I hope you can see my screen.
Yes, ma'am.
Okay. Medium reliability. Okay. Okay, no, this is Marabuzu. Dark cloud cover. You said tweezers, right?
Yes, ma'am. Harami, then tweezers.
Harami, okay. Harami, okay, Harami. Okay. Now the Harami candlestick, the medium reliability candlestick that takes two candles for the formation. Okay, which are the dark cloud cover, we have the piercing line, we have the engulfing, we have the Harami, and we have the tweezers. Now, this is an example of dark cloud. Okay, when a candlestick opens with a gap, it opens with a gap. Now, it happens, remember this candlestick, you must note where they happen. If you see them in the middle of no trend, middle of nowhere, please ignore them. Even if you know that is a signal, you must give them, or you must spot them on comfortable zones. When we talk about comfortable zones, we can call it support and resistance. Anything you want to call it, demand and supply zone, qualitative level, whatever. Anyhow, you remember your region or levels of value. Okay, that is what we mean by zones. Okay, this is a dark cloud cover. Then I just want to go straight to where he starts. This is the formation like this. We'll spot it in chat too. Okay, this is a piercing line. This is a piercing line when you also have a gap. I believe he has talked about this. I want to go straight to Harami. Engulfing. Then this bullish engulfing. Then where is Harami? Bearish engulfing. Okay, this is an example of a Harami candlestick pattern. When you have a candlestick that is inside another candlestick, that is inside, Harami is just like a pregnant woman, right? You have a candlestick. Okay, you have a candlestick that is inside another candlestick. Now, for it to be a Harami, you know, the baby candle must be inside the mother candle. Both the wick, the body, if it has a wick, it must be inside the mother candle. If it does not have a wick, it must be inside the mother candle. That is when it's a Harami. Now, it's just like a pregnant mother. The baby is not competing height with the mother. So the Harami, what makes it a Harami, this baby candle must be small and must not be more than 50% of the mother candle for it to be a Harami pattern, something like this. Something like this. You know, this is the mother candle, this is the baby candle. It must be contained in the body of the mother candle. Okay, both the wick, the lowest, the wick, which is the high and the low wick, the open and the close of that candle must be contained inside the body of the candle. Now, if this is happening on the support, please, this is a very strong reversal candlestick, a very strong, is rarely you can, you know, it hardly fails, except there is something we call a breaking news or one strong fundamentals that, you know, try to violate this candlestick pattern. Just like when you're talking of dark cloud cover or piercing line, those candlesticks are so powerful that when you spot it, even recently on gold, with all of these things that happened recently, okay, even before that gold started selling, he formed a piercing line. He formed the dark cloud cover on weekly, and even Brent crude before it now started selling from 130, and from that 130 it sold to around $100 per barrel. That's how powerful candlesticks can be. Now, when we spotted that candle, we just knew that it was a sell, and it happened on a weekly time frame. That's a piercing line. I will show you in charts of crude. So these candles are so powerful that, yes, they might not form all the time, especially this second family, talking about that cloud cover, piercing line, Harami, and, you know, engulfing is always there in the chart. You can always see engulfing is always there. But you see this dark cloud cover, piercing line, Harami, they are rare. They are rare to find, but when you spot them on the chart, they are so powerful that, you know, you can collect a whole lot. It can change, it can reverse a whole trend. It can reverse a trend. So this is something like this. This is the formation of the Harami. Then which other can, before we go to that? These are the second. Yes, go ahead. You have any question, please? These are tweezers. Okay. Now, tweezer, this is the formation of tweezer. When you have, someone said, excuse me, so you wanted to ask a question, please go ahead with your question. When we finish tweezers, we'll go to chat.
No, he said tweezers.
Okay, tweezers. Now, this is the formation of tweezers. When you have equal candles, if you're looking at tweezer tops, sometimes if the two candles, remember, when you talk of tweezer top, you are searching for it on a resistance or at a resistance. That means a market must be uptrending. It must have bought for a while, for a very long time. Then, depending, remember, I keep emphasizing on time frame. If someone is trading 15 minutes, your uptrending in 15 minutes might just be a beginning of downtrending for another person in the time frame. You know, so whatever you define as your trend based on your time frame is what you'll be using for your judgment. So if you say your trend is 15 minutes, then that means for a while it has bought and bought and bought and bought. Now approaching a resistance on 15 minutes, you start spotting these candles. That means for that particular time frame, you expect a temporary reversal. Because it's a lower time frame. That temporary reversal, you can get in and get some pips from it. Okay, so everything depends on your personal time frame or your choice. Okay, so example of tweezer is when you have, this is bullish, since it's an uptrending market. Someone is at my gate. So since it's an uptrending market, you know, the first one will be bullish, then the second one will be a bearish candle. Now the tweezer tops means at the top, if it has a wick, the highest price, which is the wick of that candle, will be equal. That means price, this is bullish. That means This is the highest price it's got to. This is bearish. This is also the highest price it's got to. They are the same level. It did not take out this last price. They are the same. The price stopped at the same level. Then also the opening price. This is the opening price of this bearish candle, and this is the closing price. They should preferably be equal. Preferably. Sometimes you might consider just the wick, but when the wick and the body is equal or are equal, it's more powerful, right? So this is for a case that has a wick. Now, if it does not have a wick, it can come as this. I think there is one on gold. It can come as equal body, equal body. Okay, which is something like this. Can still see this. These are tweezer top. Now, if it's happening at the bottom, you say tweezer bottom, that we are looking for it on a resistance, on a support rather. Something like this. It's seen as tweezer bottom. Okay. And you have now, because it's on a support, you have the first one is bearish, the second one is bullish. The second one is bullish, telling you this is the trend. Okay, reversal of this former of this somehow downtrend to an uptrend market. Now, like he said, sometimes market can gap up. Sometimes you have to, it all depends. If you understand how candlestick works, as this market opens, since you've spotted this, as this market opens, the next candle, you can see this one gapped up, okay? If you have it like this, a gap, sometimes you just need to wait for a little retracement for you to, back to this. But then if there is no gap, as this market is opening, just know that this is your signal, right? So you get into this market. Somewhere below here is your stop loss. I emphasize on stop loss, very important. Stop loss has dealt with some of us. Of course, I believe by now some of you have begun to understand the market. Please and please, we keep emphasizing. We won't be glad, okay, if you make mistakes. Yes, mistakes are inevitable in this market because we are all humans. We fight, we battle with our emotions. We battle so much with our emotions, right? And we handle our emotions differently, but limit your mistakes. That is why we are guiding you. We've poured out our hearts so that if you are in our Sunday analysis, okay, we mentioned GBP USD and Euro USD for a buy. Look at those pairs today. Now, they didn't buy immediately. I keep saying weekly analysis is within the week. Now, if you check GBP USD, it made over 100 points. It made over 100 points. Okay, so that's what we are talking about. If we are here to guide you so that even while you make mistakes, you understand that, okay, I'm making mistakes, but, your mistakes will be minimized, to be reduced. So stop loss is one of those mistakes that traders make on trading because of maybe you feel overconfident or you said, oh, if I put this stop loss now, I don't want to take loss. Please, it's safe that you put the stop loss and take the loss. It has dealt with some of us, some of us learned through the hard way and we are correcting it as the day, because I tell people this is a skill. You keep learning until you get better at it. Then can confidently, relax and know that you've paid yourself for the rest of your life. That is how I see it. So mistakes will be there, but please limit your mistakes. So if you are spotting something like this, somewhere below here, because this is your point of entry. This is your signal in this case now. You are not, okay, we've not taught you trend, we've taught trend line, we've not taught you some other things, MACD and indicators, patterns and all of that. For a case of candlestick, you are entering this market because of this pattern of candlestick. So if by adventure the market was stubborn or became very stubborn and takes out this candlestick, please exit. You have no other reason to remain in that market. What are you remaining for? This gave you a signal for a buy. And at the end of the day, there was a sell that closed below Now, that's why I don't like, if I'm putting my stop loss, I won't put it at this point, as in, I won't put it at the exact price where I'm having this tweezer. I'll put it some pips. I can just use 10 or 20 pips, 10 preferably, 10 pips below this support. Below this support, or if there is a weak initial support that has a wick on the same level, I use that wick or so 10 pips below that wick as my stop loss. Now, it's better you put this stop loss and forget that market. If your other stop loss is $5, depending on the amount you have in your account, just take it that, oh, I've lost $5 out of my $100, so that you have a very relaxed mind. You will see that at the end of this market, at the end of the day, this market can stay 3 days on this level, gathering volume. It has not moved. But when it will move, you'll be happy. Yes, King Dan, you're raising your hand. Ask your question, unmute your mic and ask your question.
Okay. Good evening.
Good evening, sir.
Yeah, what I want to ask now, like the issue of this stop loss, because like since I've been using the demo account, you know, I like, since I've been using the demo account, I thought I've been able to, you know, do with my emotions, because the way I had been handling the demo account, I set stop loss, I'm able to, you know, bear it and everything. But since the life account, it has not been so. And now with the teachings now, the question I want to ask, like looking at this signal here, we can see that this tweezer, to some extent, it's a long candle. Now I'm trying to put a stop loss. No, after this signal, let's say maybe after this signal, I decide to like, okay, let me wait, let me have a confirmation, let me see what the next candle is to be very certain. Then, and looking at it, I get the next confirmation, which is this other candle here now. And I'm trying
Which
to
one?
put my...
This one?
Yes.
Yes, okay.
And I try to put my stop loss below these tweezers, like you said. So, and now looking at maybe my account size, maybe I'm just having a $50 or a $100. Now, looking at it from that point and the extra pip I'm leaving for my stop loss before it takes it out or whatever. So now in that aspect of that small account size, how do I, you know, how do I go about it? Because looking at the stop loss now, it may even be more than that. It may be more than $5 like that. And, you know, what's the advice for that? Knowing that, you know, it is small account size.
Okay, that's a good question. Now, that's why I said these things come with experience. For me, based on my own experience, if I spot this candle, brother, I don't need any other confirmation. I can't wait. If I wait for this candle, this market, that's one of the reasons. My best candlestick, that's one of the reasons I don't trade engulfing. You know why? Because if I wait, imagine you want to trade an engulfing candle. Before, this is the candle, maybe this is the support region you want to buy from. Now, an engulfing comes up the next candle and engulf this whole thing and maybe get to this place. It's far from me already. Get to this level. If I must trade engulfing candle, when candle has, I will show you in the chart. When it has done this, I will wait for small candles that will retrace almost 50% of that engulfing before I can get in for a buy. Before I can get in for a buy. Now, if based on my experience, if I spot this brother on a very key level, I don't need any other confirmation. Whether I spot it on daily or H4 or weekly, depending on the time frame, I don't need any other confirmation. This already is the height of my stop loss. Then I will add some tips below it. That's why I said different time frame users use different stop loss. If I'm trading daily, I don't expect to use any stop loss lower than minimum 80 pips. Now my lot size might be different based on my account size. Like 80 pips can be 0.1, it can be 0.05, you know, depending on my account size. That is not my business. But I will calculate what I will lose anyway. Now, because I'm using daily, it should not be lower than 80 pips. Now, if you're using 15 minutes, you will see that the height of these things will not be as big as that of daily. It might just be 30 pips or 20 pips. Now you put that 20 pips, maybe add 10 pips to it, or mostly 30 pips. Now, if I give people signal, I'm giving them signal based on my daily calculation or H4, minimum 50 pips. For some persons, because of, they feel 50 pips will be too far for market, they'll just choose 30 pips or 20 pips. I don't like that kind of stop loss at all, because most times market will always pull back to take out that 20 pips. It's too much. It's too small. You give market space to breathe, for pullback, for dancing around and all of that before market will finally move. If you watch GBP USD, you see what happened.
But what I'm saying is,
now, I understand. Now, if this has happened here, you can see there's a gap here. If you've been listening to Mr. Josh, he will always tell you that market will come to fill in a gap. For this particular example, now there was a gap. So entering here is too, you'll be exposing too much from your account. If this has happened and you didn't enter at the beginning of this candle, please wait for a little retracement. Even if you wait for that a little retracement, it happened to retrace, which is this. This is your entry. This was supposed to be your entry point. If you now enter here, it has reduced your number of stop loss. Now, yes, most times it's just that it happens that this one retraced, though it's a chart. It also happens in our live chat anyway. It happens that this one replace. Sometimes it can gap up and continue. It will not just come back. The truth is that you've missed that particular one. Because if it now continues and you now enter at the up here, except you just choose, maybe you just step to your lower time frame and see small swings. You said, okay, I can't be using this far distance again. You feel it should continue. You just enter somewhere and use small pips. But ordinarily, if you are entering based on this particular candle, your stop loss should be below here. And your entry should be immediately the opening of the next candle, based on experience. For me, I'm not waiting for the next candle for confirmation. That's just it. And if you had waited for when this one happened, now you waited for, let's say it's daily time frame, waited for 1 day, 2 days, 3 days, you might even be scared that, oh, this thing have started selling again. Well, it has not started selling. It's just a retracement. Why? Because this formation is still holding. Price has not taken at this level. So if you understand the whole thing, how it works, you should know that immediately retrace, it gave you another opportunity for re-entry, because this is still valid. But entering here will be too much exposure. That's the truth. So me personally, I can't enter here, because I know that the entry point is immediately after this candle has closed, this formation has completed, whether it's weekly, whether it's daily, whether it's H1, whether it's H4. The next one is my entry point. Kinder, is that understood?
Yes, very clear.
All right. So the next candle, I don't know, have you discussed about this? Okay, this is the third family candlestick. Third family candlestick, we'll be looking at sandwich pattern, sandwich. Okay, abandon baby. Sandwich, then. Now, sandwich are 3 formation candlestick patterns. 3 formation. In 3 formation, we're looking at sandwich, abandon baby, dark, morning star, evening star. Oh, 2 powerful candlestick patterns. Now, sandwich is where you have bread, butter, bread. I mean, just like a sandwich bread, you have the back cover. You have one slice of bread, you have another slice of bread. Then in the middle, you have, all those plenty mixtures. That's how it appears in the chart. Sandwich, if it's happening on a resistance, that means you will have one green candle. The middle candle will be red. The middle candle will be red, and another green candle on a resistance. On a resistance. I'm not reading all of this. Now, if that happens, it signals a reversal. If it's happening on the support, it signals a reversal too. Now, the middle candle is what shows the direction of the market. The middle candle is what shows the direction of the market. Remember, if this is for a downtrending, most often, a perfect sandwich happens almost the height of the three candlestick most times will be equal. If they have a wick, they will have the same equal wick. If they don't have a wick, if it's just body, they will have equal height most times, but sometimes they can come with just small differences in height. Something like this is a perfect sandwich pattern too, even though they are not so equal. Now, the middle candle is what shows the direction of the candle. Please, most times, remember, we deal with live charts. Sometimes this sandwich can form up to 6, even on this support. This one will form, this one will form, this one will form. You will not be relaxed. Okay, you now said, oh, I've completed, the sandwich pattern has completed. You said, oh, the next candle is your entry. That next candle might form again and form red, and form again and form green. Still happening on the same level. Of course, you've already identified whatever you want to identify. You've already identified a level, whatever candle you want to identify. The extra ones, as long as you can get in your entry, like I said, what kills most people is impatience in the market. I keep telling us we are retail traders, that you enter the market now, does not mean that it must move. I've stayed in the market for 5 days. The market did not go, it no shake body, no profit. I was even not like I was just on Jordan, but because I was very confident that both candlestick patterns, both using my what's it called, support and resistance, using my own level of experience, I knew that, man, this is meant for a buy. But candles kept coming there, kept coming, rejecting, because mostly I use daily candles. That means for a whole day, market will just do green. At the end of the day, it will reject. I was still there. Why? Because I had my stop loss in place. Even when, if you watch lower time frame like H1, 15 minutes, you'll be so scared that, oh, this market is going against you. But as long as you understand what you're doing, the best thing is not forget that you even put in a trade and relax. So this, what I'm trying to say, that this, after this formation, you can have other smaller candles forming around this region. It can be green, it can be red, it can be just like that. But until, remember, you can get into the market after this formation, right? So if it continues ranging around this level, you leave it, as long as your stop loss is somewhere below here. If you want to take it out, it's one of the ones that will fail. Remember, there is no holy grail in this market. Every strategy fails. But we are saying that we are giving you the ones that we know that when they occur, okay, they have 70 to 80%, what's it called, positive results most of the times. So this is what we are saying. Now, this is for a sandwich pattern. If it's happening on a resistance, it will be green, red will be in the middle, then green will cover it. That's for sandwich. The next one is the morning star and evening star. These ones, remember, there are 3 family candlestick patterns. I don't want to read this. Okay, morning star, will just go straight to the candle. Morning star pattern is, I don't want to go through this. Now, this is the formation of a morning star. It appears morning, if it's morning star is happening on a support. If it's happening on a support, if it's evening star, it's happening on a resistance. Morning star, you might not understand, the names are not so important, just understand the psychology and the pattern. Okay, even if you call the evening star that it happens at the support, not so important, but you just know that, morning is low. You are just rising from bed, so it should be on a low. You are just starting your day, so it's on a support. Evening is happening on a resistance. those are just names, but understand the formation. Now, morning star is when you have, if it's happening on a support, that means it has been selling for a while. It has been selling for a while. Then on a support, you have the first bearish candle appearing on that support. First bearish candle appearing on that support. Then the next candle is a doji, must be either a doji or a hammer. Either a doji or a hammer, the next candle. Now, the next candle that will form will be a bullish candle. This other doji or a hammer can be either red or green. It can be either bearish or bullish. The color can be red or green. Anyone that comes there is still okay. Okay, so but the next one we're considering is the color of these two, which is the bearish and the bullish. This one is an indecision candle, which is either a doji or a hammer. Now there are two ways you can trade this formation, but is the two ways. The first way is for people that already have confidence and understand how this candle can be formed. But normally, for a conservative trader, you should wait for this formation, the completion of this trade. That means if you're trading 1 hour already, first, the foundation is that you must have spotted a support. That price has come to rest on a support. Now, this was the first candle. If it's 1 hour, this is the first 1 hour. Now, the second 1 hour gave you a doji or indecision candle. If you already remember, when these things are forming, you should always be proactive. You should always imagine that even though that you don't have to be faster than the chart. Trade what you see, but you should anticipate it. If you watch when we do analysis, we'll tell you that even when we see head and shoulder or inverse head and shoulder, though you've not been taught that, we'll tell you the right shoulder has been formed. We are expecting the left shoulder. If you check GU, that's exactly what happened today. Yesterday, it did as if it was buying. Some of us, I jumped in yesterday. Okay, I took small profit yesterday before that sell started that yesterday again, started selling again yesterday. Now, already we spotted inverse head and shoulder on H4. There is a price to it. There is a price at the completion of that inverse head and shoulder. So you already know that if this market must reverse, we're looking at this level for price to come to complete this formation. So when these things are happening, you should anticipate what is about to happen. When you've spotted this, the next hour, this form, the next hour, anticipate for an evening star, which is the next bullish candle. After this, and B is your entry. After the formation of this is your entry. Now look at what happened. Let's assume this is our rechart. Now let's assume that this is daily time frame. Now this is the first day, this is the second day, this is the third day. After the third day, you entered here, you bought. If you are my type of trader, you won't even think of taking your profit immediately. Some persons will say, oh, they've made profit, let me take my profit. Now he bought this bought the next day. After the next day, look at what happened. He sold. The next day. Now look at what happened let's assume it's daily trend. For almost 5 days, market was ranging. This even gives you more confidence that this is still valid. Yes, but I know that it will be so difficult for you because this sold and this sold. You'll be like, oh, this market has been here for 5 days. It's not even doing anything. Just buying and selling. I would have taken my profit. Yes. Currently, I'm on silver. I'm on Euro USD. That silver, I want to leave it for as long as I can remember, minimum 2 weeks. And if I can stay on that market for that 2 weeks, in fact, the way I'm looking at it, the whole of April itself, if what I'm anticipating happens, I will just sit on that silver and remain there. That only one silver with just a very small lot size can fetch me $500. Now, it's different from someone that will enter the market today, exit tomorrow. It's difficult. That's just the truth. It's not easy. Me, I've been learning. I told myself, until I sit in the market for 3 months, This one is not I'm on drawdown, or maybe I'm waiting for my drawdown to clear. I'm on profit, running profit. Now, because I know where I got the market, I will sit there. You remember, it will move in a straight line. No. That means market can give you $100, come back and give you 20. Sometimes even come back and give you minus, but you are still there. Give you 200, come back and give you 80. Give you 500, come back and, that's how the market moves. But if you can build your emotion towards that, and this market, just like USD card. If I catch USD card again, if I'm able to catch this buy that is about to happen on USD card, brother, I will sit there, because USD is about recovering. After the pandemic, this is the first time they're moving their interest rate to 5 basis points. They've already moved the first one, 0.25. They're moving it now to 0.5. But after the pandemic, so they are about to return the economy where the economy was before the pandemic. Brother, if I catch USD card this time, I will sit there minimum 3 months. And you know what that means? That means in that 3 months, you can capture over 1,000 or 2,000 pips. So you can do your calculation, even if it's the least 0.01, depending on what you have in your account. So it's different from someone that will just see green and say, oh, I'll run out, I will buy again. I will run out, I will buy again. It's different. Trading is an investment. But it's not easy. So let me just talk in your own level. But it's a gradual process. When you start learning, you start building yourself towards what you want for yourself. Me, I'm working towards being, when I say institutional trade, does not mean I tell people, I'm not even into others, bring your money, let me trade for you. If you understand the business, you'll be the one to even beg me to. Because me, I will offer you, I'm not ready to offer you a ROI, this, that. Now, waiting market bring, now we'll go chop. Because I don't control the market. You get, so that's it. And if you don't understand that part of the business and the risk aspect of business, then forget it. I trade with my small capital. I don't mind till I have enough. Okay, so that's what we are saying. But the process is building your psychology, building your emotion, understanding the market. If you get to understand this market, my brother, it might take you 2 years, 3 years to understand it. But we are here to make it easier for you. For the rest of your life, you'll be comfortable. You'll be comfortable because you've already paid yourself for the rest of your life. By the time you are stable, you've stabilized your emotions and your psychology towards the market, and you've gotten the real skill. So this is an example. Now, if this has happened and, look at how many days it took for this market to move. By the end of the day, remember, our stop loss is below here. Below, remember, this one might have left a week below this. Now, if this one leaves a week below this, remember your stop loss is below that week. That's why I said this is the first method to trade it conservatively, is to wait for this formation to complete. For this formation, so the next one is your entry. Now, remember, if this candle is too long, please allow for a little retracement. If this candle is too long, the bullish candle is too long. If it's too long, remember, if it's daily time frame, you're looking at it. On H1, it might have arrived or hit a minor resistance on H1. Allow a little retracement. It can retrace a little. Sometimes it can just move immediately. But if it has approached a resistance on a lower time frame like H1 or H4, based on the length of this bullish candle, remember, the length of this bullish candle will be what will determine your stop loss. The whole formation will determine your stop loss number. So if it's too much, you can as well leave it and look for another market. If you need to wait for it to retrace, trace a little back to the body of this candle. Get your entry. Now, this is evening star. This is morning star. Evening star is the opposite, the one that happens at the top, which is the resistance. Okay, this is morning star. This is an example of evening star. I don't know how many of you that bought this material. Please, you can get this material, keep it, so that you can always refer back to it. Just 5,000. That there is it's just 5,000. You can just keep it so you can have something to fall back to. So this is an example of an evening star. Right? You have a doji. Remember, I said this doji can form in the, I didn't tell you the another way to trade this. Now let me say it here. Another way you can trade this formation, either an evening star or a morning star, is when, that's why I said you should anticipate the formation even before it completes. Okay, so if this has formed, remember this is bullish. This is the first bullish happening on the resistance, initial resistance. That means you've already spotted this level as a resistance zone. Now this happened. The next one, the doji forms. Now someone like me, I've traded this many times. Someone like me, if I'm already anticipating a reversal on that zone and this has formed, brother, as this one is starting, I'm going to enter this market. Well, you know why? At this point I'm entering here, I can comfortably take my stop loss far from here. And if I'm entering here, now remember this is already either a doji or a hammer. Yeah, assuming that this is a hammer or an inverted hammer, a shooting star, that means it has a wick. That means it closed as a normal, as a shooting star, which a shooting star already, you can trade it as a single candlestick. You can trade it because you already know that the shooting star, there was a rejection from up, coming from up. It's already showing you just like this one here. Let's assume that this was it. Now this forms as a shooting star, which is the middle candle. Now you entered here, you can comfortably put your stop loss above this wick. No, and this happened. This was your entry. Now remember, if I had entered here, my profit will start counting from here. I now sold. This will not give me a confidence that evening star has formed. Evening star has formed. Now look at the next day. It bought back to the middle of this candle, this last candle. It's still okay for re-entry. It even gave us opportunity to re-enter again at the good price, at a very fair price. It gave us opportunity to re-enter again. Now, sometimes this one might not just happen. You just start selling immediately. Now, when this happened, the next day it bought, it sold, and then at the end of the day, it gave us some good profit at least before this other swing. This one has played out. So if you stayed in the market, except you want to consider being a long-term trader, you stay in the market 2, 3, 4, 5 days. You are seeing some, some rejection, because even before market reverses, it will print candles, it will give you signals. Let's assume you enter the market that you anticipate that it will take you for 3 months before you exit that market. And after a month or 2, how many days, it start giving you some other signals that, this will not continue. You take your profit and leave the market, because there must be either by pattern or by candlesticks or by divergence or by something will signal you that, this trend is already getting tired. So you take your profit, even though that you anticipated for 3 months, it happened in 3 weeks. Take your profit and leave. So this happened, and of course it sold for some days and gave you profit before another swing came and took at this level and invalidate this. But what we know is that as long as it has given us some number of pips, it has played out based on that time frame. And of course, if you are someone that wants to be staying in the market for like 1 month, 2 months, you can be considered using 50 pips stop loss. You're considering from 300 pips and above, because you are going to keep your stop loss so far to allow the market to play around before finally you lose. You can't say you want to stay in the market for 2 months and you are just using 50 pips. How? 50 pips is for day traders, intraday traders, 30 pips, 50 pips, 60 pips, 70 pips, and all of that. So this is an example of an evening star. The next formation before we go to that, abandon baby. I'm not going to read plenty. Get your manual. Now, abandon baby is like this. Abandon baby is just like evening star. Evening star. Remember, if it's happening in a support, is abandon baby. It can happen in a resistance. It's also abandon baby. Now, this is a bearish trend getting to a support. This is the last candle. Now, this last one will gap. This baby, that's why it's called abandoned baby. This is the baby. It will gap down. There must be a space. Remember, this is bearish. This is where it closed. Now, this is where this one closed. This is where this one came out, opened and closed here. This one opened here and closed there because it's closed, it's bearish, right? So what is important to us is this gap. There must be a gap. Most of the times too, the bullish that will form after it will also gap up. Sometimes it might just come very close to this manner, open. It might not just be so perfect like this. Sometimes it can come, but this is an example. It's like an evening star, but the only difference is that there must be a gap. The baby is far from the parents, is abandoned, they've left him behind. This shows a gap, and this shows a gap, a bullish gap for continuation or trend reversal. This is abandoned baby. It can happen on a support, it can happen on a resistance. Okay, something like this. This for a resistance, which is for bearish. No, remember, this middle one can close as bullish, can close as bearish. It might not be this short, can be like a hammer, can be like a doji, can be, but you just know that there's a gap between this and this. Before this, there is also a gap between this and this. It can be small, but let just there be a gap. But this is very important to be. Let this be a gap left behind then this formation. This is an abandon. It can be a hammer, it can be a doji, it can be, any kind of small candle there. Most of this rarely occurs. This mostly occurs in indices, shares, occurs in, shares, all those Japan 225 and plenty, German DAX and all of that. It hardly occurs on currencies. The currencies you can spot this most times is on commodity currencies like the AUD card, AUD NZD, the commodity, because already I told you about commodity currency, Canada, oil, AUD, gold, NZD, tin, all those aluminum and all of that. Those are common. So, but major currencies, they don't really appear. It's rare. And if you spot it, finish work. Just trade it and finish your money there, because it's definitely clear. So this is the completion of candles. First one, there are millions, thousands, or tens of them, or hundreds of them you see in the chart. But we understand that these ones are the ones that if you spot them, you smile. If you spot them, I know that some of them might not form so often, but when you spot them, you are good to go. Okay, this man is back. All right, so if you have any question, you can ask your question before we go to that to start spotting them. Any question?
Okay, ma. I wanted to ask about locking profit, because most time I lock my profit, I just come back to the chart and see that the market has taken me out of small profit. So
yeah.
I want to...
Why we lock profit is just that, so the market will not, it's actually painful and it hurts and it has a way of affecting emotions when market has given you profit. Now, because you want to allow that market to run for some days. Now, at the end of the day, because of market behavior, just like there was a day I posted a buy GBP card. I took loss on that trade. You know why? The market gave me good, whooping $50 profit. Brother, I did not take it. I did not even lock my profit because I expected, because of my lot size, I expected that market will come back. So I was avoiding what you just said now. Market will come back. Sometimes it will just come and take me out in break even. Just take me out immediately. After taking me out, market will still go. I'll be like, this market, it never even moved the way I want it. Leave them. So I still left my stop loss where I left it. I risked about $30 in that market. I left it there. Market gave me $50. I did not take. That day that GBP hiked their rate, that was one morning like that. GBP hiked their rate. That was on Thursday now. I posted it, buy GBP card. No, that market came, gave me profit. I didn't take it. I didn't even lock my entry. Now, immediately, they hiked that rate. GBP slumped. GBP card sold so well that it came to my stop loss, took out my stop loss, and was selling. Now, if I had locked my entry, I wouldn't have, the highest is that I would have broken even in that market, even without taking a loss. But I know that, it's painful when market has given you profit. At the end of the day, you end up closing with a loss. So that's why we learned that habit of, at least when market has moved, even if you want to relax or you want to allow it to float, lock your entry. So that the worst that will happen is that it will take you up, it will take you out with break even, no loss. But it's better it takes you out with that break even than market coming back to take your loss. Or my boss, Mr. Josh, will say, even if it's $1 for that data or that data, sorry, let me not say wasted because we are all learning. That data you have, put in, that energy, that stress, everything that, even if it's $1 you're taking from that market, $1 is 500, close to 600, 580. Excuse me. If you funded CBN rate is 420. Now, even if it's that $1, even if it's $2 that you are saving from that market, maybe market has given you $10, depending on your lot size. You said, okay, I will not lock the whole thing, I will not break even. Let me lock, even if it's minimal, $3. It's better you lock it, brother. Lock that $3. And because markets, remember, in as much as we know the technical setups and all of that, you can't predict what will happen. Yesterday, we're in a meeting. Was it yesterday? My boss just sent us a message. He said, sell USD CNH, that's Indecision. He said, why? He said there is a plane crash in China, and 132 persons died instantly. You think things will not change? It's a breaking news. Nobody planned for it. So because USD China is directly opposite to China have different currencies, and that is how they impute their own. So it's directly opposite to their economy. I was like, because it's still a Chinese airline. So it's a breaking news. Those breaking news are things that you don't have control over the market. They can happen, anything can happen. Last week, or was it last week or last 2 weeks, Japan had there was an earthquake in Japan. JPY has been down since then. Also, of course, we know that they don't increase they always devaluing their currency each time. They are in negative interest rates, Japan. So, you know why? So that places like China and some other countries that buy from them can buy their products at a cheaper rate because they have cheap production. They have cheap labor. They have, their money, they are on negative interest rates. So if people even go to bank to borrow money, they borrow money and bank even pay them for borrowing money. You can imagine that. You can imagine such economy. So they say they have no inflation. They have no reason to increase their rates, their interest rate. So Japan is, for us, we see that it's weak, but the economy is strong. The economy is strong. So stuff like that, such things like earthquake, we don't have control over them. When they happen, it just happen. Now, if you were in profit and such news occurs when you are sleeping and you did not lock your entry, the market comes back and take you out, what will you do? You come back and say that your account has grown. Those are the risks in the market, which will tell you how to manage those risks. So locking your profits or locking your entry is part of risk management. David,
Right.
Are you with me?
Thank you so much.
Yeah.
Thank you.
Any other question?
Yes, sorry, my own question is on time frame. Now, if I take my direction from maybe from H4 or from D1, and where is it better for me to take my trade? Let me put the question that way.
If you take direction, Let me show you. Let me share my chart. So that I know that time frame can be confusing sometimes.
Very confusing.
Yeah, I know. It's
Very
normal.
actually.
It also took me time to understand it. Okay, now let me say the chart. This is okay. Now this is GBP AUD. This is if you were in our meeting on Sunday, we said we'll buy GBP AUD. If you were in meeting on Sunday, we said instant buy on though. Me, I was talking about a little retracement on GA, and that's GBP USD and Euro USD. And if I had waited for that retracement, I would have gotten a perfect entry. Okay, but that's by the way. We also said we are going to buy GBP AUD and GBP NZ, but not instant buy. That was on Sunday. Okay, Sunday. This happened on Friday. Now this is yesterday. This is daily time frame. This is daily time frame. Now yesterday. Now today again. Now today again. This market bought. This market. Let me see how many pips. This market bought. In fact, some people bought this market today, almost 90 pips. Bought this market today. Now, finally, it also came back to this. This is still happening on daily time frame. Now, let me mark this level. Let me mark these 3 candles. Let me mark these 3 candles happening on this support. Now, let me switch to H1. H1. Are you seeing this?
Can you imagine?
Yeah. So someone trading this now, H1 will say, oh, this market don't buy scatter. This market has not made an inch. It has not moved. It has not done shimbai. Now, all of this happened, market bought, came back, but look at, it's still ranging on the, now it has formed on this time frame. Now you will say market is ranging. Now look at the lower, this is the lower upper boundary of this range, and this is the lower boundary of this range. So if you are targeting to buy this market, you don't have any reason to buy it here. This is now a resistance on lower time frame. H1, this has formed a resistance on H1, and this is the support on H1. So even if you switch to H1, you said, okay, I'm looking at buying GBP AUD. Target it at that lower range, at that support. If you say on daily, you also need to wait. The price, I tell people, time frame does not change the price. The price remains that the price of GBP AUD is here. The only thing is for you to understand even if you don't, for me, I can take my direction on, if I have seen this, I know that I want to buy at this support. Whether I switch to H4, I switch to 15 minutes, I just know that my entry point is around here for a buy. Because I already know that I might not be interested in going to H1. Even though, yes, we said, okay, take your direction, if you check weekly, this is it on weekly. So you can see 3 candles. You can see all those candlesticks we've been treating. Now, this is already an initial level. Yes, if this level, anything that makes this market breaks here, you see the way it's ranging here. That is why we said, now, if you are entering anywhere around here, look at this week. Can use, now, if you are entering at this lowest range of support, this week will be your stop loss. This is weekly. Remember, this is a whole number of pips. This is around, okay, 50 pips. Very good. Very cheap, a very cheap, good entry. Because why? You just use, based on this level, just use the lower part of this week and put your stop loss. Now, if you are entering at that lower support, your risk is small because this is your range of week of your stop loss. Because if it breaks this week and closes below this, the next target is here. There's also another support region here. But this is the first support region first. So after doing for 3 weeks, look at it, it will buy, reject, go up, come back. This one bought massively. This will be over 200 pips. Yes, I remember last 2 weeks we told you buy GA, instant buy on GA and GN. This was that buy, 400 pips, over 400 pips. I missed this buy and it pained me so much because I analyzed it in our group analysis on Sunday analysis, but I didn't buy it. But that's, by the way, that's gone. The market is not running. So this happened, and at the end of the day, market still came back and sold back. After selling, what happened? It stopped at this up. This is already telling you that market is establishing a zone for 3 weeks. Now, this is the 3rd week. This week has not closed because it will close until Friday. That's when it will close. So if you are entering anywhere around here, you already know there's a price here that has formed the lower range of the support. Whether you switch it to daily, you switch it to 1 hour, you switch it to, you just know that there's a price that has formed the lower range of the support. And that's your entry price. Does not mean if you are buying at the lower range, you still will not make profit for upper range based on H1. But just know that if you are buying here, you are adding both the number of pips, which is from here to here, is already 96 pips. Now, if you are adding this to the other week, the other stop loss that we calculated 50, that's 100 and something pips. That would be a stop loss because you entered at the upper range. That's the good of switching to a lower time frame. Now, if you're looking at it at daily, you just know that a market is just very small thing, but that very small thing has already created levels on lower time frame. On lower time frame. So that's just the, I don't know, but with time frame is what, with time, just all I just need you to do is study. Like I tell people, even the class that just started, I tell them it's not going to be so sweet and easy. It's not going to be so sweet. Look at, okay, we've already done hammer. This, okay, now look at example of evening star. Thank God we've even spotted this. Evening star on H1. Look at it. You just, and where is it happening? Remember, this, I told you that this is the lower range of the support. I told you this is the lower range of the support. So I'm interested in this one after this formation. This is it, evening star, happening on the resistance. And after it, how many pips? Based on H1, you shouldn't expect it to buy for 200 pips and 500 pips. After this, what happened? Let's assume you entered here. Remember, when you entered here, you retraced a little. You entered here, it started coming down before finally moved. Look at it. It bought 60 pips. It's H1 time frame. So H1 time frame, if you're able to capture 40, 50 pips, you are good to go. It's H1, it's intraday trading. With 0.05 is $5 or $6, depending. It's intraday, $6, $5 is almost close to 3,000 naira, brother. You know, you get. So this is the formation. It's formed on lower time frame and it played out. So you wouldn't expect it to buy till it's H1, you spotted it. At the same time, if you spot it on higher time frame, you know, you expect more pips. Okay, I don't know if daily pay. If it all depends. Daily pay, if you are patient to, you know, wait on daily. It's not everybody that will be patient to wait for those signals to form on daily. It's not everybody that will wait for markets. Okay, this past 10. This is it, but I don't like this formation. This is daily. Okay, this is still H1. Let's switch to daily time frame. The person that asked for time frame, I don't know if I'm able to.
Yes, thank you. At least it's clearer a bit. Just that thing, especially when you now go to lower time frame, you just scatter.
Yeah, that's the thing. Is lower time frame has a way. We call it noise. Lower time frame does, you know, there is a whole lot of noise in lower time frame. So it can be confusing, even with higher time frames, so it can be confusing how much more. Okay, so let's start spotting. I know the class should be over by 10:30. Okay, just some minutes will be off the class. Oh, okay. So let's start spotting the candles. The ones we can spot, the ones we cannot spot. You go home and check your chart. If you spot it, post it in group chat. We should even be giving you assignments. My own is My own is what? I don't understand. Kingdom, what are you trying to say? If you spot anyone, you can post it on the chat. I think there is an abandoned baby on Japan 225. Mine is, I don't know when I will be like this or 2000. Brother, we not get another place. We don't get another job. Me, I not get another job. This is I'm hoping to do it for a lifetime. So we die inside. No, not we don't die. We live inside this chat. So I've come to accept it. I've made mistakes. I've also lost money. I think it wasn't easy. It has been a journey for me. But because I knew that when I saw that when I made my first withdrawal, I knew that it was working. And I told myself, we are going to remain here. So I did everything I could to make sure that I got better and I improved. I'm still learning. We still pay for Josh. Now Josh, they pay for me, sir. He will just pay for, isn't there? I've paid for another, because most classes, you pay for it before you have access to, when you want to attend professional class. You pay for it. He will just say, isn't I've paid for a class. This is your link. Enter. We enter because we are still learning. Sometimes if he runs out of money, I pay for him, I subscribe for him. So it's like that. We'll keep improving. That's why I said you just have to. If you lose $50, does not mean that that's the end of trading for you. Me, I've lost money, brother. But the good thing is that they were my money. That's why we said, if you are going into this business, don't bother going to borrowing money. No. So that you will not enter any form of panic. You don't even think you are too good to start borrowing money to trade. It's wrong. It already destroys your psychology. Because the next thing that will come into your mind is, how am I going to pay? How am I going to pay? How am I going to pay? So just relax and do what you can, but study. Don't relax. If you really want to get better, you need to study. If you don't study, sorry, you said something. Okay, this is an example of an abandoned baby. This is it. This is an example of an abandoned baby. Remember, if I might not be interested in tracing back the support or resistance. If you trace it back, you see that it's already a support. Well, you can see it as an evening star. It's still good, but for me, it's more like an abandoned baby or evening star, anything, or whatever it is. This is one of the examples. Why? Because this closed here. This is a bearish candle. It closed there, then opened here again. This is where it opened. So there's a gap. This is where it opened. So there's a gap between here and here, right? And there is also a gap between this one and the opening of this one. So this three is the formation. And since that time till now, this is Japan 225. You can imagine. This is blood money. This moves like gold. This, in fact, it's even higher than gold itself. This is, if you had, we saw this today, and my boss was just like, look at markets, look at what you are teaching. See it. Imagine you got this and you relax, even if it's here, and even if when it comes, they take your profit. This, even with 0.01, with this move, we give you nothing less than $1,000, brother. And this has happened this is daily. This happened 1, 2, 3, 4, 5, 6, 7. 8.
How many dollars, please, is that?
With 0.01, this is Japan 225. The movement is like that of oil, like that of Brent. Even with 0.01, it won't give you anything less than $1,000.
Can you imagine?
Yes. Yes, it won't. The only question, this is 2,600. It has a very high P value. It has a very high P value. Let's even say it's $500, but I know it will be more than $500. Let's even say it's $500 with 0.01. If I'm trading it, I might not trade with 0.01 because my capital will take me up to like 0.05 or 0.03. Know what that means? But I did not even see it, because that's why we said there are a whole lot of things you can trade. But if you focus on one and understand that movement, brother, oh God. The market is real. Oh. You are learning the preliminaries for now. There are more to learn. Okay. So that's just it. You know, you just need to understand is how these things work and market movement. And once you get in, now this is more like tweezer top. Tweezer top. Even this came with a small wick, and after this, look at it sold. Right. So let's spot other ones. Let's go to currencies. I want to spot Harami. So you can see the Harami, or we've spotted them. Let's go to currencies. Let's go to currencies. We have ICT trading strategy. Let's go to currencies. Okay, GBP card. Now look at that GBP card I was talking about. I know it was on Thursday. This is today, Monday, Friday. Yeah, that thing happened around here. Now, after everything went sell that day, what happened? It still came back to the support. Now, if I had entered at the lower bound of this support, I wouldn't have had any fear. But I entered. Now, after these so many formations on this support, I already knew that it was a buy. Now I entered around here. And this market from here made, first of all, bought for how many pips? 67 pips, let's say 70 pips. Now I remember I entered mother market around 0.05, and I had 2 entries. Now I use normally, before this has not happened before then. So I used somewhere around here as my stop loss. Somewhere around it was around $30 or so. It's my stop loss. And this bought, I didn't take that profit, and at the end of the day, it's not. But all of that, after everything that happened, well, you can see how many candles. It still did, none of these candles closed below this support. You can see when they come, they still close up. When they come, they still close up. It tells you that there is something happening around there. And this is happening after a market has trended for days. Look at sell, a huge, I remember even when we were doing basic, I remember teaching you with GBP cards. Remember that sell after, so it's happened. And if you yes, I remember, look at the completion of an M. You know, this is extended M. It's extended a little because this the where the support of M is, but this is an extend this harmonics actually, but let's not go into that. This harmonics extended M, and this happened. Look at this range, already tells you this region is a buy. And if you had gotten into GBP card today, it bought mad over 192 pips, brother, close to 200 pips today alone. We are targeting it again tomorrow. So let it finish today. We'll get into GBP card for a buy tomorrow. We already have GBP NZD, GBP AUD, of course, GBP card, because market is still on this support. Remember, if you switch to lower time frame, all of these things has done swings already. This thing you are seeing ranging here has already done market swing. That is the difference. I might not spot all the candles. Please, if you spot them, post it on the group chat so that you have what to do. Now, look at that small thing I shaded on daily. Look at the move. So on daily already, on H1, we've already gotten market swing. Market has done this, has come back, has done this, has come back, has done this, has come back. Still, at the end of the day, you can see that it's just creating a range still on that support. Now, this is today's zone. That's how we bought today. Now, this is the retracement. You can use, this is not your lower time frame. You can use your lower time frame and say, now it has taking out a broken structure. This is a broken structure around here. This is the last structure that was taken out. That means, let me delete this one. This is the last structure that was taken out. This, somewhere around here, Remember, that's why we said when market has made an impulsive move. Now, this lower time frame, it has made an impulsive move.
See, this thing no work.
It's
Me, I know
wrong.
what you are saying. Why is this guy? Why is this pressing?
Please mute your mic. Thank you. It's wrong to say, okay, market has made on this. This is where the lower time frame now helps out. Now, on that higher time frame, you won't see all of this. You are just seeing one candle. Now, but on lower time, that's why we say if you now switch to lower time frame, it has approached an initial resistance. What makes it a resistance? Look at it. These are small resistances on lower time frame. And look at it, it's reacting to it. Market is now retracing. So allow it to come back based on lower time frame, give you a lower low, then you engage for another buy. This is that retracement you are seeing on lower time frame. But this, you might not see it on that daily. So if you switch back to lower time frame, you can see these market swings. Because on daily, it's just one or two candles. But on lower time frame, you can see the market, the positive move, the pullback, the positive move, the pullback before then a change of trend or something like that. So we have 6 minutes to go. Please, other candles, I've already shown here in our reading manual. Get your manual, brother. Get your manual so that you will have something to fall back to, even when the class is no longer there. Okay. If you have your question for the other candles, spot it. When you spot it, post it on our group chat. If you see the formation, just post it. If it's correct, we'll let you know. That's how we learn. We can't keep doing everything. If we keep doing, you won't study. So we need you to study. So if you have, let's use 5 minutes to take questions. If you teach you for wage prices, but after each of them. Okay. So if you have any question, ask your question before we call it an evening. Because I'm tired already. Questions for those candles. So I'm still in your group, even though I'm not your tutor anymore. I'm not your instructor anymore. I'm still there. So I've given you signal this evening. If you know trader or won't come to your house and trade it now. All our own is to teach you. To teach you is left. The decision is yours to take. No, we can't teach you and take decision for you to. It's not possible. So the decision is for you to take. I've given you C tweezer, bottom C tweezer here. You can see it. Both the lower wick and the body is the same. And this is daily. This is H1 self. This is H1. Look at it, tweezer. And at the end of the day, look at how market bought massive. No, I don't want to start talking about how far it bought, but for it to make this swing, that was already giving you profit. Remember, it's H1. After this formation, this is the tweezer here. After this formation, bought how many pips? 175 pips before it pullback and then a continuation. That's it. That's the power of candles. This is it. You can see it. We just studied this. Yeah. Go ahead. Question. You can't take decision for us, man, but you can give us decision. I've given you decision this night now. I've given you decision for GA, GN, GA, G card. We've taught you swings, we've taught you so many things. Look for something to use and enter it. Because the move will continue tomorrow. This is just doing a pullback this evening. And there's a news on GBP by 8 a.m. in the morning. So I might use it to give us another run for tomorrow. So that's the decision. I've given you a decision.
Sorry. Now the issue I'm having now, like, it's when it comes to the news of a thing, because for now, I just decided to just give it a pause. Let me see, maybe after we are through, maybe after the fundamental class, and then I can resume with the stuff. Because like the few times I had traded from the life account. So the last trade I took, because I actually analyzed it, then I was waiting for a retest, like coming back to a particular support so I could take a buy. So, but then based on the fact that I was actually busy that very day, we're busy with a lot of stuff. So when I just got the chance to check on the phone, so try to place it. So at that moment, I didn't know that there was a news. I'd already placed the trade before I came online. Then I saw Mr. Josh message then. So I just look at it that when I've placed it, I didn't want to close it. I just left it, let it just play out the way it wants to go and whatever wants to happen. Then I lost that because I know if I'd seen the message then, because I was talking about the news also, I wouldn't have taken that. And there was no way, I wasn't having access. I don't know how to do with the news of the thing and all that. So I don't know. That has been another challenge for me though.
Okay, I understand you. Okay, just technicals is important too. Why news is also important. We'll teach you the what's it called? The fundamentals will be taught. And the news, there is a way to trade news. That's why we tell people, if you don't understand the news, please stay away from market. If you don't understand the news, stay away from market. So some news before, just like USD now, they've said they're going to increase their increase. That was yesterday. Powell said he was going to go for an increase of interest rates latest in 2 months' time. Investors are already set. Investors already know that, So before that 2 months' time, people that have money has already put money in the economy. People that have money the news has been released already. Now that day, you think, immediately they increased the day of the news. Now they said, okay, probably at the end of the day, you now increase the rate. And of course, you know that rates increase should strengthen the currency based on what we are trading. Okay, it should buy. Now they will release it that day. Instead of buying, market will sell. At least the sell now is just to panic people that if the market is doing the opposite. You know why? Because it has already been priced in. The news has already been priced in. People has invested when dollar was cheap. They said, we're going to increase the interest rate. They now start buying dollar. They now start buying it when you have not even woken up. So that day of the interest rate now, it will do the opposite. Why? Because the news has already been priced in. So the news comes, there's different ways to trade different news. The market is deep, brother. So just follow up as long as you can. Read as many things you can read. You can come online. You can go across. Just read both your technical, just read. Don't depend only on what we teach you. Yes, we will teach you what we understand. We'll give you what we can give you, but also don't depend only on. Just read vast. But we'll teach you fundamentals and teach you different ways this news can be traded, and at least have the basic understanding. But if you don't understand the news in days of high volatility news, you can stay away from the market to avoid being crushed.
Like it's the same thing I'm saying. Now I don't understand the news, and then we're being taught all these things, and we still have to practice them. And now, like I said, I've always been on the demo before, but now it's like I see the clearer picture. If you don't even have a practice on the life account, it's a waste. So, and now we don't even know the news. I'm practicing just with
Have
the
you been taught?
technical.
Have you attended fundamentals? Have you been taught?
No.
Have you attended fundamental class on news? You've not been taught on fundamental.
And that is what I'm saying. Like at this point now, for me, do we stop, trying to place our trades on our life account?
Okay, I
I
get
join the
you.
fundamental.
Okay, except just the good thing about news and technical is that they play alongside. Whether if you understand, except in some rare cases of what's it called, breaking news, those ones can break regions, can just break support and resistance and just be going anyhow. But most normal fundamental news, economic calendar, talking about interest rates, CPI, Bogo, all those news, they play along with fundamentals. I mean technical. So if you have your complete technical setup, even if that news come, that just like the day I was telling you about USD card, market has already established a support around it. Now we entered. If we had entered at the lower boundary of that support, even with this sell, even with the news that came out, the news is positive, but when it came out, what happened? It first of all sold. But if you had entered at the lowest support of this market, even with the news, you not doing anything. At the end of the day, market range on this support and range on for days. Look at it, is still what at the end of the day, because the news at the end of the day will still play out. So if you have a perfect technical setup, perfect technical entry, even when the news comes, it will just panic you. That is if you're even watching your chart. Sometimes if you're not watching your chart, you just see that, oh, market news even came, it did not even touch you anything, because why? Your entry was perfect. So for now, just focus on the technical aspects. You can trade perfectly well if you understand the technical aspects. Even when the news comes, you just see that news will work in your favor. Why? Because your technical entry was okay. The technical setup was fine. The news will just work in your favor. So follow your technical now. Follow your technical setup. Yes, sir.
Yeah, let me chip in something here. The person that is asking that question, you can actually trade. What you need to do is that, the problem with so many of us is that we take too much risk because we want to make too much money. I keep telling people, this market, it is not your own. You don't just come and say, this forex, the way they are saying it, I want to knock, I want to collect. No. Have a profit target in mind. One. By the time you go to advance, they will teach you what is called risk management. The question is, the person that is asking the question I want to ask you today now is, how much is your equity? For example, your equity is $100, for example. The question is, how much are you expecting from the market based on your equity? If we say this market is just like an ocean, if you carry a cup to an ocean, you should not envy somebody that going to pocket. Can you hear me?
Yes, I can hear you.
Yes, sir.
You cannot envy somebody that went with a bucket. The person that went with a bucket should not envy somebody that went with a tanker. You understand? So it is what you came to the market with that you go with. If Ezine said you're seeing Ezine made $200, $300 based on her equity, one, and the wealth of knowledge she has acquired, two. Now, I tell you now that if you have $100 account, I've made this analysis with class, but let me make this analysis so that you understand what we are talking about. If I have $100 account, ordinarily, when you give somebody to trade for you, the person tells you, oh, okay, look, I'll give 15%. You'll be very happy that when you give the person $100, the person will be giving $15 every month. You'll be glad because it's a good business, as the person is paying every $100 every month. Sorry, $15 every month. But now look at it, you can actually make that $15. Now, for the sake of you doing it yourself, let's say, okay, $5 is to pay yourself. Now you say you want to make $20, no problem. You know that if you want to make $20, you have $100. That means every month you should be having $20 on top of $100. You should be having $20 on top of $100. Now, if my target is to make $20 every month, what will I be targeting every day? We have 20 trading days in a week, sorry, in a month, 5 trading days in a week. So that means if I am trading, I should be expecting to get $1 every day in the market. I'm expected to get $1. Are you getting the analysis? I'm expected to get $1 every day for me to make $20 in the market. Yes, there are some days you may not make $1. There are some days you make $3. So there are some days you make $5. I put it to you that if you follow what we are teaching, there are some days you make $10 in the market. If you make $10, do you know that you have met 2 weeks targets? You have made 2 weeks targets. Can you say for 2 weeks I will not trade? Of course not, because you don't need money. But you have made 2 weeks for trade. Some persons, when they make this $2, $3, they say, ah, it's too small. Let me wait. That market have done 20 pips for that day. That market has given you 20 pips. That 20 pips, when somebody that have a good equity, it is $20 for mini account, 0.1. If you're using a standard account, it is $200. Because you are seeing $2 to you, market has not moved. Now it will continue to move. Now ask yourself, how many pips will that market do in a day? That market, you will see that have done 20 pips, will come and do a pullback of 10 pips or 5 pips. You run away, you japa. The next minute, you see the team move up. You say, hey, this market has started moving. You go up there to go and hit it. You've forgotten that that market has done almost 70 pips. How many pips is it remaining for the day? For D to settle down, it will go down again, do a pullback again. By that point, you will lose your money. But when you have gotten $2, $3 based on $100 account size, you can say, this market has blessed me today. You can close. That is the problem we have as traders. Many persons don't understand this. So if you can, what I'm saying is that even as you have not learned how to trade the news, what I want to advise you is every day you want to trade, open your chart, open to Forex Factory, forexfactory.com or Daily FX. But Forex Factory is easier for you as a beginner. Check through the news and say, is there any news for this pair I want to trade? For example, is there any news for USD? If there is any news for USD, you have not learned how to trade the news. And that news is coming out by 3 o'clock, US section. What you need to do, if you start trading in the morning, you wake up in the morning, say by 4 o'clock, you do analysis. You enter the market, trade through UK section, that's the London section. Brother, if you get to US section, let me tell you, if that market started buying and you're buying that market, bros, please close that trade. It don't give you money. Close it. You mustn't remain in that trade from morning till night. Close it. If you see $2, $3, close it. As that market is buying, don't expect that the US section, the market will continue to buy. Now lie. The US section will come and do a correction of what the London and Asian section have done. If the Asian section have done something like a buy, the London section might do a correction of Asian section. When I say correction is that if the Asian section is buying, the London section will come and sell. And when it gets to the US section, it will buy. Until when it is the close of the London section, the market will start doing ranging. The US section to the Asian section will start ranging until when the market opens again. That is how the market does. So when you are buying and you know that there is news for USD, please, once it is 12 o'clock, once it is 1 o'clock, do me a favor. Either you lock your profit, lock it very well. If your target is $2, lock $2 and leave what the market is doing. If it continues, okay. If it doesn't, you come and take you out on $2, your money is still intact. But when you leave it open-ended, when the market has given you profit, you went to put a stop loss behind your entry. My brother, you are taking serious risk. you are really taking serious risk. Leave that market, because the US section will come and do a reversal of what the London section have done. So I've advised you today, check the news you have for the week that day. If it is GBP pairs, avoid GBP pairs until the news comes out. Whether the news comes out or not, that's why I told you that in your mentorship, we'll be teaching you some things. If the news comes out, well, let me show you something on my charts. Let me show you something on my chart. Let me show you a move for GBP card. Let me show you a move on GBP card. Where is that GBP card? Yeah. All right,
Your
let me
screen
show
is
you.
not showing, sir.
Let me show you. Can you see my screen now?
Yes.
Hope you guys see my good. Now look at it. When this market, look at this market, look at this bearish candlestick. Have you seen this bearish candlestick?
Yes.
This is happening for news. I think that was the news agent Ezine was telling you. GBP card. This is a massive movement. This is an impulsive candlestick. I tell people, when you see this thing, that's why I told somebody was asking me how do they know. We'll be teaching you some of these things. Even though Ezine had told you that we pay for courses to learn some things. But you people, you are told to learn it free of charge. Out of 250 persons, you see less than 10 coming to class, but there is no problem. Even if they tell you fund $50 account, it's difficult for you to fund $50 account. Buy manual so that you read is difficult. I wonder how you want to learn. I wonder how you want to learn. But there is no problem. Let's just believe that money will come someday. Now, look at this thing. This thing is called what is called an FVG. This market have created an FVG called fair value gap. In this market, there will be a balance. There should always be a balance between the buyers and the sellers. Whenever the market, there is only sellers or buyers at any point in time, the market will come back and feel that imbalance. Look at this thing. As at when this market did this runaway, this massive sell, the people in this market were only sellers. And that is institutions when they were running, when they were moving. Most retail traders are not here. When you see this thing is caused by news. That is why I said, if you're not on this trade, so many persons will not know the market was buying. People think the market was buying. But look at the massive runaway. It has taken so many persons out of the market. And some persons that does not have surplus, with fear, they will run away. Now, after this thing happened, look at what I did. I just marked this line. I said this market will come back and fill this void. We started buying this market. When this market have done what it wants to do, started buying, it dragged us for some time up to this point. Look at what the market is doing. But look at this one again, the other block. The market came to this other block and started retracing. My brother, if you know, you know. Do you understand? If you know, you know. By the time I wake up this morning, if this market came down, decide to come down, I will follow it. But if it does not, that means that this market is going to take out this other block and it will buy. I will buy this market and I'll buy it up to this point. I'll buy it up to this point if I see it in the morning. Let me say, for example, I see it from here to here is 64 pips. By the time I use 0.1, it is $64. I will leave the market. So it is everywhere. Most of the GBP pairs. Most of the GBP pairs. Look at this man here. Look at GBP, JPY. Look at it. All this thing is doing, no problem. He's running away. All these things. This market is creating an imbalance. Only buyers are in this market. this market will come back and fill this imbalance. It will surely come back and fill this balance. So when this market starts selling, our bias is that this market, one, will sell up to this point. It will sell up to this point before it will do whatever it wants to do. So that's why I said, if you miss it, don't worry, just wait for it. Agaracha must come back. You enter the market for a sell. And as you're selling, you're coming to fill this imbalance because sellers must be in this market. For now, it is only buyers that are in this market. Sellers will come and fill the imbalance. So market does not create an imbalance. If it creates an imbalance, it will come back to fill the imbalance. But this is not, like I told you, this is not what we'll be teaching you now, because if we start talking about these things, you may not grasp what we are saying. So we are just allowing you learn first. When you learn, by the time we start chewing rock in the market, you understand what we're talking about. Okay, I think I just say, let me chip in that, please. So check for the news. Any news that has the day, that has any time for that, they look at the time. Like Ezine told you about the GPP news that will be coming by 8 o'clock. What you need to do is that do your analysis in the evening, sorry, in the morning, if you can, or even this night. Now, the news is coming out by 8 o'clock. During the Asian section, market does not move that much. So by the time you wake up, 4 o'clock, 5 o'clock, you look at what the market is doing. Don't enter GBP pairs because you don't know the news. Allow the news to do whatever it wants to do by 8 o'clock. After 8 o'clock, 8:30, 9 o'clock, the market has given you direction. You enter the market so that you will not be depleting your account until when you're taught how to trade the news, because there are so many news and its impact in the forex market. Thank you.
Thank you so much.
That question has been answered.
Thank you so much, sir.
Welcome.
Okay. So you can close the class. We are
Okay.
done.
All right. Thank you very much, everyone that made it to the class. Always ensure you make it to the class. Look at the WhatsApp platform. That is where we send any information. If there are vital information, we'll send to you guys there, and ensure you follow up with that. Attend your classes. You've not learned anything. This is just the beginning. We have so much we need to teach you in this intermediate technical analysis. Then we'll go to advanced. Then it is fundamental market psychology and market psychology, risk management, and fundamentals. So these are things, market psychology. So you need all these things. And like I've always said, those ones in group 2, 3, they're not finding funny. It's only when you have funded your life account that you can have access to that advanced class. We have tried to teach you from basic to intermediate. You can actually trade with that. Even if you come to weekend analysis, we still talk about fundamentals. But I can assure you that when you attend that fundamental class plus the analysis, and those ones in the fundamental class are people that will be taken to mentorship. By the time we take them to mentorship, by the time the first advanced class has graduated, the second set just entered now. By the time they got into a particular number, we'll start teaching them, we'll start eating rock, we'll start chewing rock. That's when I'll be talking about 4 ways price is delivered, 4 ways price. I just showed you one that is talking about fair value gap and liquidity void. That is one. We have another one. We have stop run. Stop run. We'll teach you that. We'll have consolidation, how to trade consolidation. So there are 4 ways price is delivered in the market. We'll teach you all of that. We'll teach you how to have a good day. We'll teach you native levels. These things are courses. This courses is not less than $200. And I can tell you, $200 is less than 3 days to learn this thing. Less than 3 days to learn this, and you pay $200. We are giving you free of charge because space has paid for this thing for you, this class. Because ordinarily, I came back since that was 8 o'clock, and since 8 o'clock till now, even as in we've been here, and you guys have in the class. It's a good one because when you join classes like this, I see those ones that are serious, and it's those ones that ask questions, and I am obligated to respond to them. Because if you don't ask question, my brother, I'm a very busy person. We manage accounts for people. So my eyes is always on the screen 24 hours, even during the day when I send chat. My eyes is always on the chat. What wants to happen? What is the news? What is happening? Because you will not tell investor story by the end of the month. You understand? You can't tell them story. You must give them the ROI. You can give them, you must share profit with them. So I need to be on the chat. So that time I'm spending to chat, brother, you should appreciate it because I've just removed my eye from the chat to type out those things for you. And if we're here, when we come back, we're very tired. We're all family men. I'm a family man. My children are there, but we still have time to have this class with you guys. So please, I know you appreciate it. Let's ensure we take advantage of this because to be very candid, you cannot find all of this out there. You cannot. At free of charge, you cannot. Not at all.
Even with paid class, even with paid
class, you cannot.
Can't get it anywhere.
You cannot get it even with paid class. So many persons have been calling us to tell us that, been telling us that if you see the testimonials, that in fact, they when they joined, in fact, somebody from, isn't it, that lady from where? Which country said?
Abuja. Okay, no, that Switzerland.
Switzerland. The lady from Switzerland sent us a message and said, thank you that she has paid so much to learn Forex. She's just starting, no, she's just starting. Because when we start giving her the basics, she looked at it, she said no. And see, they are paying $100. By the time they finish the basic, they are going to intermediate. $100, no story. They're paying $100 and they'll still fund their life account. But they've started, even the one in what if this country they speak like people where may not understand their English. When I speak English, what's the name? What country is that?
Is it Kenya?
Is that guy in Kenya? That guy that was speaking, that was saying thank you very much the first day we did that class. That Kenya or Burkina Faso, I don't know where that one from. His grandma said he's cut and join, but God will help us. He will understand. Value. So appreciate it and ensure that as we do these things, teach you these things, go back and practice it. If you don't practice it, you will not know, remember it. As you see it on the chart, look at it, look at what happened. Engage the trade, put your stop loss. By the time the market move your direction, you make $1, see, you'll be happy. You have that sense of satisfaction because you're doing what you know best. And with time, brother, nobody was born with candlestick in his head. You understand? So you will understand these things even better than we do. It's just constant practice and consistency that will take you to this level. All right, thank you very much.
One more favor, you guys can fall back to your group chat. Always leave a comment of appreciation so that those people that are missing classes can, just one or two things to tell them what they're missing and to encourage people that, I know some persons are in that group, they don't even know what is going on because they feel every group is the same, scammers and all of that. They don't even know what they're missing. So someone can be encouraged with your testimonial. So you can always do that in our group chat so that some persons can pick courage, and at least I believe if anybody is following up, the person will not want to leave. What is happening is that some of them have not even logged in for the first time. They don't even know what they're missing. I believe if we give testimonials, some persons will be encouraged to at least let me give it a trial. And when that happens, I know they will find value. So you can always fall back to group chat and say something. I wouldn't tell you what to say because you know what you are getting. So say that thing you're getting, and even if you don't, let's just use it. It's something. It's an added advantage even for us. So thank you, everyone, and good night.
Thank you.
All right, good night.
Thank you, sir.
Welcome, brothers.